All right, guys, what's going on? So today I'm going to talk about a losing trade I had. This was actually a recommendation from the comments. Someone said, all right, we're learning from you making money. Can you show us you losing? Because, I do lose, and I lose a lot, actually. It's about making sure your winners are bigger than your losers. So I thought this was a great topic. Talk about a play I recently made and how I lost money on it and the important part you could take from it beyond understanding the play itself, but also again it shows you how finicky these options chains are. So if you like this video, if you guys have more questions so I can make more content geared towards what you're looking at, make sure you subscribe, drop a comment, drop a like, and I'll get to it just like I did with this video. So that being said, I played Microsoft and I did two plays with it. I straddled it for earnings. I got the puts earlier because I'm also playing it for a different reason. I'm thinking Microsoft is going to be engaging with a buyout potentially. I played a different one. I played the buyout target itself, but then with Microsoft, I was like, I could get puts on it, and then they have earnings, and then I also I straddled it by going on the call side too. So how I lost, I got these 100 weekly puts. I got them on Wednesday, so they had a lot of time. I got them on Tuesday, had a lot of time on them technically because it was going to cover earnings, and I got them for 20 cents. And I got it at a really low price. And what happened, I think was it the 13th? It was either the 13th or no, it was the 16th, the beginning of the week. And what happened was when I got them, it's no, they only had 2 days left of time, so it wasn't that much time. But again, decent play. But what happened? I got 5 of these 100 puts for $20 a pop, so I spent $100 on the put side, and then I got the August 17th calls because again, puts are going to be more expensive, and I wanted stuff more towards the call side. I got these 115 puts for again about 25 cents or 30 cents, and I bought 2 of them. So I spent $60 on the call side, $100 on the put side, and I lost on both of them, even though the stock ended up going up. They had a killer earnings report, and now this goes to show the puts dropped, and where I made my mistake, they went up. I doubled my money. I was at 40 something, even it top ticked at 50 cents. I could have doubled my money, took back my initial investment like I recommended from that other play, but I told you guys, I told you in the last video, I got greedy and I didn't. I really thought they were going to go down. And again, it goes to show how you could be wrong with these earnings, and it's a toss up. You never really know. And, I thought the other news might come out soon. But again, when you try to hit it on the head, that's where you run into the issues. So I ended up losing simply. They, as you see yesterday, they were up. I was up 100% on the contract. I could have took out, and I didn't. And I thought my calls would help me as well too, but they didn't. And these went to 1 cent. They expired worthless because they expire today. That's it. I didn't hit it. Anything if you weren't, as you see, come expiration date, and that's the danger of these weeklies. If you're not in the money, you lose. That's it. No ifs, ands, or but. Your contract's going to become worthless. So that's what happened on the downside. Now, on the upside, even though I thought, Microsoft still went up, I don't know where exactly they went up to and how much. They went up 2%. They went from 104, they clipped 108, closed at 106, but I ended up getting these 115 calls slightly out of the money, and now I was up for briefly in the morning. Let's throw up the 1 minute. I had a chance early in the morning for what? 3 minutes. They were at 30. I don't know why it was saying it. Why did it say it clipped 50 cents? I don't think I was ever up on them, and that's kind of what I paid for them. So it started to go down and this is the mistake I made. Well, I should have known, and this is where I run into these problems. Just options premium on earnings. This is just simply implied volatility fucking you. It's if you're not getting it at a good price, or you're getting it where everyone's expecting earnings, they're expecting a big move, you're going to run into these issues, and that's exactly what happened. Why can't I throw up my daily chart? This thing's being annoying, but yeah, so I don't know why it's saying it went up to 50. It didn't at all. And, I thought I got them pretty cheap the day before because they were dropping yesterday. I said, hey, I could pick these up at 30 cents, even though you see where they came from. And again, I should have I didn't really pay attention to this right here. I guess hindsight's 2020. Looking at it, you could see, contract goes from one day to, if we overlay it with Microsoft, I don't even think Microsoft moved like that. You see, you look at the last 3 or 4 days, Microsoft was going down. It did come up from here, so the 7-Eleven. We'll see from 7-Eleven where it did, but for most of the days, it was staying flat, ran up. But the option contract, when we go back to that option contract, I guess no, yeah, 7-Eleven is when it ran up. The contract barely went up. It still went up 50%, but you could still see, see what's going on. What's this? July 22nd. Tomorrow's the 21st. Okay. Um, but you could see kind of what happened with it. And yeah, sorry, I had a text. There was a chance to get it. I should have probably tried to secure it in this price range, and I wouldn't have lost as much. But again, implied volatility killed me. I do have time on it, which is the good side. And if the premium does pick up, now would probably be a good time to average down on it if I believe Microsoft is going to keep going up. And that's something I might consider, or maybe even going further out, because now all of these calls are going to become a lot cheaper because of this volatility move, as you see here from the change close, anything that's not in the money. But as you see, you got killed on the call side as well too. So again, with earnings plays, unless you really factored exactly how much it was going to move, you lost. And then the couple days before, this is where all of that premium came from. So that's where you got to be careful. This one, I think after Netflix and everything else, I just got into it too late, and that's something I'm going to reconsider on all of my earnings plays moving forward, because now you're really buying things at $2. You're going to pay $3. You're paying a lot, and unless you hit it right on the head, chances are you're not going to make that much money or close at where you paid for it the day before. Not really worth the risk when you put it in a perspective. So all in all, I still own the contracts, but I lost about $160. Again, not bad. And as you see from my other plays, I'm trying to go for stuff. When I lose, I'm losing small, but when I win, I'm winning big. So that's the idea here. I did want to go a little bit bigger on this. I thought Microsoft had the potential, and I was a little bearish, but I guess my emotions and my own preconceived ideas of what was going to happen and other plays coming in got in the way. I guess the best thing, it's easy for me to brush off a $160 loss. That's why I recommend you guys don't go crazy. Paper trade and, stay focused on it. That, I think, really the mentality of this. And, I'm going to take this not as a revenge trade. I'm not going to try to come back and find it. That's where the danger of averaging down could come in. But what I'm really trying to do now is reevaluate, because the best part about taking an L like this, especially during earnings season, is you're going to be able to see what the landscape of the market is. And really, if you are able to learn from this, you'll be able to do substantially better for the next time around and know where to play and find these earnings opportunities and not get caught up paying too much. And this is where, I could find some mispriced ones. I could, even if it's not mispriced in Microsoft, I just thought it was going to make a huge monster move. That's up or down. That's why I like that play. But this wasn't aiming for mispriced. There was clearly a premium. I bit the bait, and, I took a L. So hopefully you see the next part of that, emotions in controlling the initial outlay, your positioning and how much you're putting out there is very, very important. So hopefully that explains it. Hopefully you guys get to see the other side of the coin and how I'm handling it, but also, how I lost money and learn from this and learn from the money I lost and learn from the time I spent on this so that you could be better. And again, this is the danger of options. You could lose your money like that. Snap of a fingers, 50%. As you see, it went from 25 to 50 cents to one fucking cent, $50 to $1. It could evaporate like that. That's why I always recommend you guys paper trade, because if you're not really familiar with that, you could lose. In the last aspect, even if you're right on a call, yeah, call means go up, put means go down. Obviously not in this case. And that's how options work. So you could be right on the move, but it might not be reflected in the price, which might not be reflected on the profit. I guess, sorry, taking a sip of water. One thing I'll leave it with that is important, it's about this mathematical formula that's defining, the correlation between being right and being profitable. In the stock market, you could be right 100% all the time, but it's not going to always translate into 100% profits, because a lot of times people are right, they know what's going on, but it's not going to get reflected into the stock. So f of x does not equal y, if that makes sense. So you have to find a way. You could even be wrong, and as you see, I could have been wrong and still found a better way to play this than being right. And even if you're right, you could still lose. So I was wrong on both. I was wrong on too many functions, and my outcome, my y, was a big loss, a substantial loss, 100% on one area and 50% on the other end. That's a shitty play. when you look at the numbers of it. So you have to think of how you could turn your ideas into profit. And sometimes you may always have the ideas right, but even when it translates into the options, it might not be profitable, which is something you really, really, really have to be cautious for. So hopefully that helps. Hopefully you guys like it. Drop a like, drop a comment, give me a subscription, get me some interaction, and let's go over some other questions. Love you guys. Stay in school.